All right. Good morning, everyone. Let's kick it off. Okay, so last night's session in U.S. markets, another strong drift up session, closed at new all-time record highs for the S&P and for the Dow again. If I'm not mistaken, we're starting to starting to creep up toward some of the record high levels in the Nasdaq as well, all the way back from 2000. So that's quite spectacular. Um, we've like we said before, we're in that period of the year. You're starting to feel it in the market. There's not a whole lot of volatility. There's not a there's doesn't look like there's a rush on either side of the market, and we just continue to show maybe slightly lower volatility and small moves on the day, which obviously, unless you have some sort of news-driven event, it's going to be really hard to get markets to correct under that sort of environment. We did have ISM numbers yesterday, which beat expectations after slightly weaker ADP numbers. We've got we had the oil stocks, that started to trade a little bit better, although we haven't seen the real follow through yet out of the physical commodity. So we've seen what we've really seen. Moving on to the Asian session now is just an absolutely huge run out of China, and very very quietly. So I think we've rallied as much as 6 or 7% over the last 5 or 6 sessions out of China, and really to be one of the year's best performers, which is in huge contrast, obviously, to everything that we keep reading and that's talked about through the about the economic situation right now in China. One of the things, China's been a huge underperformer in equity markets for several years now, but what I think's really important here is whether or not this rally out of China is simply totally pricing in the future rate cut that everyone keeps talking about, the second round of rate cuts that everyone's talking about, or if if there's another reason and the market's actually outperforming there. I think that one of the reasons as well is that the market's been trading trading better is because now you've just had that interlinking between Hong Kong, and you've had Hong Kong and China. There's always been restrictions for foreigners investing into China, so I think now through Hong Kong, a lot of these guys are starting to get a lot more access. Since that linking's happened, you've seen a real push, and maybe that's a big part of why it's happened as well. So yesterday you did have record turnover in the Shanghai market, and so that's kind of one of the reasons why I think that potentially could be happening. We have the Japanese yen right now as we speak, 10 ticks below 120 to the US dollar, so we continue to see the Nikkei push up on a weaker yen. The dollar continues to rally across the entire basket. We're at 123 handle on the euro. You can see we're getting pummeled against the rand again. The dollar basket's just going absolutely crazy, and that's going to continue to be a real shake-up, I think, in equity markets that the market probably hasn't fully priced in at the moment, in terms of what that's going to do to a lot of the other sectors and securities and things like that. So, I think that there's maybe still a little bit left for those moves. But we'll have to watch and see how they play. So we play out. We have the mining stocks that had traded well yesterday or last night in Australia, following through a bit on a late rally out of London, and I think that the China equity market's obviously helping that a little bit. So watch that one really closely. We're probably gonna have to see some gap fills right now in some of these. And some of these mining stocks before we can maybe potentially resume lower. All right, very little out in corporate action today. Sorry, no spectacular chart of interest on the day, but we've got Dollar General Corp out in the U.S. That's about it, and then very light on the market data today as well. We've got Bank of England rate at 2. We've got the ECB coming out with its main refinancing rate at 2.45. And then we've got initial jobless claims on Bloomberg Consumer Comfort. So no data until the afternoon, but some pretty important stuff in the afternoon. All right, let's get into the maps. The first thing that I want to have a look at here this morning is Sunlum. So we had Sunlum that dropped nicely yesterday, and it was trading weak before this already. We pointed out a day ago that as this thing dropped 71, it was starting to look a little bit shaky here. It was just trading really weak relative to the market ahead of yesterday's operational update or the trading update. And so yesterday obviously came out softer than market expectations. We took about a 4.5% loss into the close. Actually bounced a little bit into the close, but we dropped a major level here at 69, which is quite obvious. And just looking for support here. I mean, if you look at some sort of horizontal support, you can maybe throw this level out as horizontal support, or maybe even the top end of this range. I don't know, somewhere in here around. Call it $63, or you can even go back and look a little bit at trendline support, which also comes in kind of close to that level. So somewhere I would say around in that range is really where support I think is. There's also some major support at 59, if you ask me. So between the 200-day moving average and maybe 63-ish, somewhere there's definitely some support in Sunlim. And this has been one of the more overbought stocks in our index. I think this thing has been a little bit priced to perfection. So after yesterday's sell-off, I really fully expect to see a second-day play today. Without without pricing in what the market's going to do today, I would expect this thing to be offered again. I think this thing has to correct a little bit more, especially after yesterday's numbers, and we'll see what happens. But maybe down to at least $63 in Sunlim. All right, the next one we'll have a look at is SEPI. SEPI dropping a little bit of I suppose you can call it a head and shoulder here. The right shoulder looking quite tall, but still a bit head and shoulderish nonetheless. Either way, major support right around here at, let's just throw the level out, call it 40.5, which dropped yesterday, and dropped all the way down to the 40 level. I mean, obviously from the height of this channel, we've got a massive target here, probably $7.5, which percentage terms obviously is, it's close to 20%. So just watch SEPI. This could have a significant down move on the cards. All right, Naspers. Also want to look at Naspers. One of the things that we talked about obviously is this massive support level at 1430. The other day when the market was really under big pressure, you can see we dropped it all the way down to 1350. We closed above 1400 that day, and then the next day we already regained this level. Either way, any way you look at this, we had a little bit of a descending triangle here, or a flag, whatever you want to call this, on the breakout. And I think we've done a full test here. We're breaking out again to the upside. To me, this has got higher targets written all over it. This thing's outperformed Tencent hugely. I think the rump's probably got to be close to $200 after yesterday's move, and the average of the rump I think is negative 30 or something like that over the last year. So. This is a huge premium. Obviously, we had some really bullish news on Naspers, but at some point you got to think that rump's going to come in a little bit. And anyway, so we're going to need to see Tencent play catch up in order for Naspers to continue to run higher, I think. All right, next one, MTN. So MTN obviously broke down hard the other day below what was major support in the kind of 218, 220 level. If we zoom this in a little bit, we talked about when we broke down right there below that support level, we ripped down hard. We made a huge reversal in the last couple of days. We've gotten nicely back above that level and back above 220, so that our range there between 218 and 220 has been regained, and I think that's really significant going forward. I think that opens the door for us to come back up, maybe run to kind of 230 in the near term, and maybe potentially on even higher from there, depending on how things shape up with the in Nigeria and Iran. All right, and then the last one I'm going to show is Amplats. Amplats came out yesterday and announced, or Anglos, I should say, came out yesterday along with Amplats and announced a final 10 candidates that they're looking at for a sale for one of their mines, about $300 million. Standard Bank put out a valuation of that mine at about $319 million, if I'm not mistaken. So I don't know if the market was disappointed and it didn't trade well on something that you would think would be a little bit of relief for the share. So we've been in quite a tight range, mostly between about, call it 385 and 348. We closed right at 348 yesterday. If we drop from here today, I think there's a big downward move coming of as much as $40 or so. And also noticing on Bloomberg Terminal at the moment, Anglo American is cut to underperform versus buy at Bank of America Merrill Lynch just now. All right, that's it for today, guys. Good luck out there.